This is Property Guide brought to you by Property Now. The debate this week is very, very interesting. Is the market in Mumbai headed for a crash? Will prices come down 30% or 50% as some analysts predict? We have a wonderfully exciting panel of guests. But first, if you have an opinion about whether or not the prices of Mumbai are going to come down, tweet it out, hashtag Mumbai price crash. That's what we're going with this week. Take a look at these numbers.
High ready reckoner rates, lack of funding from banks, and the black money bill will lead to a 50% drop in property prices in Mumbai, according to a report by brokerage firm AMBIT Capital. According to the report, banks seem to have turned off the tap for developers, and this will lead to a cash crunch in an already cash-starved market. Adding to funding woes, the government's direct benefit transfer of subsidy cuts off yet another source of liquidity for developers. A sharp decline in launches, high ready reckoner rates, and an 8% gap between rental and lending yields makes a larger case for a price cut. Further adding to troubled waters is a 30-month inventory pile-up that is scaring off potential investors. The sector is also losing investors with the passage of the black money bill. And if the Binami transaction bill is approved, more investors like ultra-high net worth investors will back away. So with all these factors posing a threat to property prices, is a 50% dip in realty prices plausible?
Is it possible at all that the prices in the city of Mumbai will come down 50% across the board? Debating this, Niranjan Hiranandani, Boman Irani, Ramesh Nair and Pankaj Kapoor. Of course, the author of that particular report from AMBIT Capital refused to join our panel and is not here to defend that particular report. But gentlemen, jump in whenever you want. This is an open debate. Niranjan, I'm going to start with you. Is it possible at all that we'll see a 50% drop if there are no takers for all of that inventory that's piled up in the city? Then simply on demand and supply, shouldn't prices come down?
Faye, I don't think that is going to be realistic in terms of it. In fact, I am predicting that you are going to see a 5 to 10% increase in prices by March, April, May of next year. So I'm a contrarian view to this report, because you have to understand that every year the ready reckoner prices are in fact going up, not going down. Secondly, we are seeing a difference which is taking place in terms of corporate deals and an increase in corporate buying, which has happened in the last couple of months. So I don't agree at all with the report saying there's a 50% possibility, 50% drop in prices. No way, no way.
Niranjan Hiranandani, the ready reckoner rate is a floor. It's an artificially maintained floor that the government keeps to use the prices, to hold the prices up. But there's a sharp difference between where we are on ready reckoner and where the actual prices are. And there's a huge margin there that might still come down. While it might not be 50%, on what basis do you think it will go up 10 or 15% by the end of the year?
Incidentally, you must understand that the Income Tax Act is now tagged on to the ready reckoner rates. So it's extremely difficult for anybody to justify a sale below the ready reckoner price now to the Income Tax Department or through the government. So that's another story that you're going to see. So I'm not seeing a fall in prices. What you're talking about, land cost is definitely going up. Taxation is going up tremendously.
I'm going to bring in Pankaj Kapoor right now, because Pankaj believes that we are going to see over a period of time at least a 15 to 20% drop in rates from where they are right now. Pankaj, tell us what your justification is for believing that we'll continue to see a further cut in rates in Mumbai.
If you look at last 1 year, we already have seen the prices have actually plateaued. There's hardly appreciation in the prices, and builders have started giving discounts. So if you look at an overall sense, there's already been 10 to 15% corrections in the property prices. Why I say that the prices have to undergo further correction? Because today's prices are unproductive. We see inventory rising, we see cash-starved developers, we see they're not able to take care of their EMIs. So one thing is sure, that unless they reduce the prices, the sales are not going to really go up. From 2009 till now, because of the increase of the ready reckoner values, along with that, the premium which builders
okay,
have
let's take this point by point. I'm going to bring in Boman. Ramesh, jump in when you have a point here. Boman, are developers cash strapped at this point, unable to pay their dues? Are we looking at a situation where lenders will have to start possessing these properties and selling them in a fire sale? Is that a possibility? Is that something that can be said generalized across the board for all builders?
Faye, let's start off at the AMBIT report itself. Nowhere in the AMBIT report do they particularly claim that the prices will drop by 50%. They've made, including the Knight Frank report has said that there's been a slowdown in new launches. That really does not give you the picture entirely. It's the media that's been crying out that prices will drop by 50%. And the very fact that, AMBIT is not there to protect them, to kind of defend their stand, there's no way we can ask them what exactly that they meant. I'm not sure if you're going to say that, developers would have to cut their prices and sell because they're cash strapped. Does this apply across the spectrum? I don't think so. It may apply to the odd developer or a few developers who may not have the requisite credit to their account to be able to complete their projects. In which case, then you're buying into a risk. And I would not advise any developer to actually go out, any buyer to go out and buy into a risk. Check the entire antecedents of the developer, his history, and then go ahead and buy.
If the new launches are coming down, if sales numbers have fallen, if there are no sales right now in the market, then what is the solution to kickstart sales at this point? If neither the buyer nor the seller is blinking, then is there a solution on ground? I'm going to bring in Ramesh Nair, who hasn't said anything up till now. Ramesh, where do you stand on all of this? Do you believe that we're going to see a cut in prices going forward?
Actually, one of the lines mentioned that it implies that Mumbai real estate prices will have to come down by 50% in the report. I don't think the report was well researched. I would say it's kind of irresponsible kind of making a statement like price is going to crash 50%. In India, residential real estate is never been a yield play. It's always been a capital appreciation play. Anybody who's looked at a 7 to 10 year period has always made money. The favorite punching bag for most stock brokerages is the real estate sector. I agree that real estate stocks haven't done well. It's dropped 47% in the last 12 months compared to the stock markets, which have gone up 10%. That's because overall real estate brokerages
I believe there's a rebut from Pankaj. Pankaj, go in.
I to some extent disagree that you should only look at the capital appreciation and forget about the productivity of price. If you look at it, both work in tandem. So if you look at the way I'm saying that if 5% rental yield, then you consider 9 to 10% appreciation, because then overall return is close to 14%. If the rental yield goes down, which is below 3.5%, I've seen that, then it starts showing the downside pressure on the capital value. So you can't continue standing up and saying that rental yield you forget about, let it be 1%, and we look at capital appreciation. So one thing very important is, I can't ignore and say that there could be a speculative times that the prices appreciated and rental.
Do you agree that the rental returns will add some sort of pressure on capital values as well?
Pankaj correctly says that we need to look at returns as far as the rentals are concerned. But that again depends on too many other factors also. Today, the secondary incipient demand, which is latent in the market, is very large. And if we can get to actually match this market, then there is still a possibility of an increase in sales and an increase in price appreciation that is going to take place, especially in the new areas that are opening up. So while what Pankaj is saying is correct in terms of a project-specific idea, if you look at the macro level positioning, you are going to see a lot of projects which are going to take off in the next couple of months. But yes,
what about the central Mumbai market? While what you're talking about is true in the peripheral areas of the city, the new areas that are being built into the city, what about central Mumbai? What about the suburbs where sales have come down, where there's a glut of supply in the luxury and the super luxury segment? Will we not see prices come down in those areas?
Of course, you're going to see people who are over leveraged are going to reduce the prices, and you're certainly going to see a price correction in projects which are over leveraged by the builders. But most of the time, what Pankaj says is correct. There is a price correction not by the reduction in prices, but a holding back of the supply. So most of the people are waiting for a particular price to come, and they're willing to wait 1, 2, 3 years. That's why what you are seeing in terms of sales not having taken place, they are all under construction. While you see in a case of a finished product, you hardly have 2 to 3 to 4% in terms of finished product unsold market.
One second, I'm going to bring in Boman Irani here. Boman, tell us what the prices and the sales have been like in Thane in your property, which is, like Niranjan was saying, at the the peripherals of the city, building then on infrastructure that might come in the future. Have you had customers come in and demand lower prices, say, I will come back when the price comes down?
I'm going to say this on air, that what really needs to be done is, if you need to see realization or rather drop in prices, you really need to have the government realize that the right way to do it is by bringing down taxes and premiums on the development that takes place.
I'm going to have to take a very quick break, but what seems to be very clear here is, in the game of who's going to blink first between the developer and the buyer, the call is for the government to blink first. On the other side, we're going to talk about black money and what the role that will play in the pricing of the Mumbai market. That's on the other side. Don't go anywhere. All right, we're talking about whether or not we're going to see a price cut in property in the city of Mumbai. Hashtag Mumbai price crash. That's what we're talking about. Niranjan Hiranandani, Boman Irani, Ramesh Nair and Pankaj Kapoor still with me. One of the interesting things, Pankaj, I'm going to bring you in here, is the conversation about black money. You were quoted, in fact, in the report that AMBIT wrote, where you said 30 to 40% of all real estate transactions that happen with black money. Do you stand by that? Are you saying that 40% of all the transactions that happen in the city of Mumbai?
I wrote this article almost a year back, and if you look back and take an all India perspective, I do agree.
I disagree with Pankaj on that. There are pockets, maybe in a city there may be 2-3 pockets where for secondary units one has to, there could be a certain amount of cash involved. But what we have seen over the last 10 years is drastic reduction of black money in real estate, mainly driven by banks, housing finance companies, financial institutions, private equity funds, the FDI money which has come in, NBFCs. All these people have come in and kind of cleared a lot of black elements. Second is, with this correction in market which is happening across the country, we are seeing investors and speculators get out and more end users coming. And more end users, again, are salaried class who do not have a black money component. Today, a JLL in a country like India does 1,700 crore revenues annually. Now, we don't charge our fees on black. We run everything on white. So, I think making a sweeping statement that 30 to 40% of all real estate transaction in the country is black, I think is totally wrong.
The way I see it, in the last 10 years, the employment of the black money increased, and that's basic reason I saw the exuberance in the realty prices. You look at the way the land prices have gone up. Lands, whether it's being held by the politicians or several other industrialists or whosoever, you look at that they're lying vacant, people park their money, and they remain unproductive. And whenever the black money comes in, realty valuations gets increased because they create a shelf for this money to get parked. What we are seeing is a prolonged inefficient zone, and this prolonged inefficient zone is because the black money acting as a buffer.
So Bhavan, come in on this. First of all, 40% of all transactions that happen in the real estate sector are black. Secondly,
it's very important. One second to tell Pankaj, you have to distinguish between land aggregators, landholders, and also real estate developers. Real estate developers come into the cycle a little late in the day. Land aggregation is now a totally separate business. It is nothing to do with real estate developers. Very few real estate developers actually, and I'm talking of maybe Mumbai city, most of the real estate development that's taking place is taking place in redevelopment spaces, is taking place in slum redevelopment spaces. And most of the real estate developers that are running large enterprises would find it extremely impossible, if not, would find it extremely difficult, if not impossible, to be able to run an entire organization where cash was getting collected. So I would agree with Mr. Nair and, differ with you on that, Pankaj.
Yeah, I do agree. I see the land is where maximum amount of employment is there, but nevertheless, there are some gray areas. If you look at luxury housing, I do agree there, do feel there is still a good employment of the black money, and we do the surveys and we know that when you do the surveys, what kind of a agreement value and what is the market value, and if you take the agreements and you look at that, what is the prevailing market value and the agreement value, that itself is a differentiator.
That is just 5 or 7% of the entire market.
All right, let me bring in Niranjan Hiranandani here.
There's only 4% of the population that can buy into that range which you're talking about.
No, I completely agree. I should not say that everyone is doing that. I'm saying that there's a segment where this, which is still involved in.
So I was saying this market is too small, Pankaj. You're talking about 4% of the entire population that buys, the super luxury housing. If over there's any kind of employment of black money, it still does not make an, dent on the overall market itself. So really to use that as a point of reference for the overall market might not be proper.
Yeah, I am talking all India points like this. Okay. I'm not really saying that.
All right, I want to bring in Niranjan here. Niranjan, we're talking about black money. The premise is simply this, that with the black money bill coming in and the fact that the government is tightening the screws on black money, is that hurting the real estate sector, and is that causing the liquidity pressure that the sector is feeling right now?
Not at all. I think it will be damn good for the developers in the future, because then there will be no question of any black money transaction being even suspected. When we are doing layouts and projects where our customers are coming today, all of them, almost 90% of them, go to banks and financial institutions to get the loans. So we would think that everything would become more and more clean and white. A large proportion of the black money is actually in land, more than anything in terms of developments, and especially in the case of township. The second aspect of it is the fact that a lot of money is going as far as approvals is concerned and what is required for this necessity to do approvals. So many of us require to actually draw money from the banks in order to pay for the approvals which are taking place today. So I think sometimes the reverse is true. Instead of generating black money in the real estate market, it's the reverse, because you really have to pay more in black money than you actually generate. So I think the black money idea is a fantastic thing. I think it'll be good for the real estate developers and especially for the consumers.
All right, so there seems to be a consensus on the fact that we won't see a 50% price crash in Mumbai anytime soon. Pankaj still saying that we might see a smaller slide in prices, but a crash seems unlikely.
I'd just like to add one point, Faye. If you look at the prices over the last 3 years, when people have been saying that the markets have been bad, Bombay has still seen a price increase of 7%, 6% and 6% in 12, 13 and 14. Okay, there's been a drop of new launches. Our estimate says new launches across the country have come down 15%. There has been a reduction in sales. Our estimate says sales have reduced 10%. And one request to the viewers is, every time a JLL comes out of the report and says that there is 77,000 unsold units, Niranjan Bhai also mentioned that this is under construction units. If you actually dive deep and look at how many of this is completed, our research says that only 2,600 units are completed and vacant, which is just about 3.5%. And if you look at 31 months of unsold inventory, in 3 years' time, that's enough time. Again, Niranjan Bhai mentioned this. In 3 years' time, that units will get absorbed. And obviously, you're seeing a price appreciation happening over a period of time.
Just to add further to it, to some extent, we see that today, only 3,000 units is a ready possession unit. But I tell you, we are seeing inventory rising. We are not seeing sales increasing. In 2009, Mumbai market sold 66,000 units, and then when the inventory was only 66,000 units, considering under construction, because we sell in under construction, my sales are coming from under construction. Today, my inventory has become 1,70,000 units in MMR region, and my sales is only 40,000. So what is happened is my sales has come down by close to 25%, and my inventory has swelled to 4 times. And that means builders' commitment to production has increased, but the sales hasn't really increased. It's not that we say that there is no ready.
Basically, what you're saying, whether you want to, distinguish between what's under construction right now and what's ready to occupy, inventory is inventory.
Inventory is inventory, because you sell from inventory. So how can you say and distinguish
Can I just add a line out here?
The sales, just to complete that.
Go ahead, Boman. Boman Irani wants to rebut. Go ahead, Boman.
Yeah.
So, Pankaj, just hold your horses for 1 second. See, what really happens is, Faye, whenever any survey starts off, every developer talks of the full potential of his development, wherein the report does not capture over what period of time, over how many phases a developer is looking at, doing the development. I remember a time when I had submitted a report for a bank funding and I had said I'm building 20,000 apartments out here. But at the same point of time, I wanted funding only for the first 1,000 apartments. So basically, the entire report was carried further, and everybody who read that report thought that 20,000 apartments are going to come into the market in less than 2 years or 3 years' time, which is not the case. I have only developed 5,000 apartments over the last 5 years over there, and it will take me another 10 years to develop the remaining 15,000 apartments. This is what also, the reports sometimes miss out on these numbers, which is where I'd like to caution my, purchaser, home buyer, especially the home buyer. When you find something that is right for you, you should go ahead and make that decision, because holding on to that decision only costs you a little more in time to come.
Yeah, all right,
when I say 1,70,000 units, these 1,70,000 units are the units launched by the developers, and most of it is going to be ready by 2017 or 18, where they have said that the possession date by then. These might today's marketable supply from where the sales are happening. So these are 1,70,000 units from where your 40,000 units sales are also coming. So that means that we are not selling as much as we require. If my new launches had been lesser than the offtake, then I say that yes, there is a situation which is improving.
So there is definitely a tough situation in this market right now, and unfortunately we've run out of time. But if you have an opinion on whether or not you'd like to, as a customer, tweet it out, #Mumbai price crash. On the other side of this break, we take a closer look at Pune. Welcome back. You're watching Property Guide, powered by Property Now. Jayashree Kurup, the head of content and research at Magic Bricks, joins us to answer questions on Pune. Jayashree, Anthony has written in. He wants to buy a house in Pune purely for an investment with a budget of 50 to 80 lakh rupees. Now, he's shortlisted a couple of options in various parts of the city, but he wants you to help him pick a project with all the legal approvals in place with a long-term perspective. Which one would you recommend for him?
Anthony, when you look for properties in Pune, there are two things that you should keep in mind. One, that the project and the locality match your requirements. The second thing that you should look at is the projects that you're looking at, are they by developers who have previous track records? Check whether they have a track record of timely delivery. You can also get a legal due diligence done. Just asking somebody whether the legal papers are in order is not sufficient. You really need to make an active effort to figure out whether all the approvals are in place and the legal papers are in order.
Our next question comes in from Vikas. Vikas wants to buy a flat as an investment in Pune with a budget of 1 crore rupees. That's a handsome budget for Pune. He says, is it better to invest in an under construction project or to pick ready to move in? What would give him better appreciation? Jayashree?
Vikas, when you're looking to buy a property and you have a budget of 1 crore and you want to buy in Pune, buy in areas which are close to economic hubs. That is when you will be able to get regular rental returns, because there is steady demand for rental property from professionals who live and work in the vicinity. Places such as Kharadi, Hinjewadi and so on, you will get good rental demand. In Pune, by and large, many developers have kept to timelines, and even if they are off timelines, it's only by about 6 months. So that doesn't significantly impact the buying decision. Therefore, this is a matter of choice and not necessity in Pune.
Finally, last question from Manish. Now, he's invested in a pre-launch project in Amanora in Pune at 6,200 rupees a square foot. He says they promised possession in 2019. Is it a good investment right now? Should he continue to hold that investment? And what kind of returns can he expect by 2020?
Can anybody look into a crystal ball and tell you how the markets will fare in 2020? I don't think so. But let's look at the prospects of Pune city. The economic activity has been steady and it has been going on for a while. So there is no big danger of your investment going down the tube, because it is a steadily performing market. The second thing is, will your money grow? Yes. the Pune market has been steadily growing. Maybe the rate of growth has come down like the rest of the country, but it has not been losing money. But anybody who remains invested for over 5 years always makes money out of a property market.
All right, Jayashree, thank you so much for answering those questions. If you have a question for us, write to us on the email ID that's at the bottom of your screen. We take a special focused look on Pune every week. So if you have a question about Pune, it'll be our pleasure to answer it for you. Thank you so much for joining us on Property Guide.